Good morning, friends. In this YouTube channel, the purpose of this series on the income tax cases is that we want to give a message to our listeners who are both professionals and the assessees also, that in the income tax proceedings, whatever the injustice is being done to the assessee at the AO level or at the CIT appeal level, that can be very well taken up by the tribunals, and the tribunals have really come to the rescue of the assessee, and it has been seen that in at least 80 to 90% cases, the additions which are being made by the assessing officers and which are being confirmed by the CIT appeals are being quashed by the tribunals. So this is a very big relief, and it can be said that there is every hope of justice being done at the level of tribunals and the higher forums. Secondly, the main purpose of this series of the income tax cases is that we want to aware our listeners about their rights, how they can take the benefit of the department's mistake in not following their procedures, because it is a settled law that if any statute, a thing is to be done in a particular manner, then that thing can be done only in that particular manner and not in any other manner. But as has been seen from issuing the notices and up to the passing of the assessment orders, the department is not following adequate procedures which have been prescribed by various notifications and circulars. So the main motto of this series is just to aware our listeners. In that series, today we have come with a case where the assessee has revised its return, and in the revised return he has shown his income at nil, which was earlier shown at a figure of rupees 135.47 crore, and which the AO denied to accept on the sole ground that the return under section 142 subsection 1 cannot be revised. So whether it can be revised or not has been very well taken up by the Honorable Supreme Court in the case of Commissioner of Income Tax versus Lok Housing and Construction Limited, and this case is reported in 476 ITR at page number 366, and the date of the judgment is 24th April 2025. This case is a little bit different. The facts are totally different and interesting at the same time. The case of the assessee relates to the assessment year 2007-8. There was a survey on the assessee. After survey, a notice under section 142 subsection 1 was issued to the assessee, and in response to that notice, the assessee filed a return of income at a very handsome amount of rupees 135.47 crores, and in that income, the income declared was on the sale of land and the floor space indexed to 5 parties, which were the associates and the sister concerns of the assessee. After filing this return, the assessee realized that those agreement to sale have been cancelled, and no income is going to accrue to the assessee in the real sense. So assessee, within the time limit of revising the return, that was in the present case, revised his return on 1st January 2009 by showing his income at nil. When the assessment proceedings were going on, the assessing officer could not make his mind to accept this return on the incorrect assumption of law and incorrect assumption of facts. The assessing officer was of the considered view that if the return is filed under section 142 subsection 1, that return cannot be revised under section 139 subsection 5, and at the same time he was not able to digest this thing, that if the assessee is showing some income in the earlier return at a figure of 135.47 crore, so now he is showing that income at nil. So he smelled some sham transactions in that, because the properties have been sold to the sister concern. So on this pretext or the assumptions, he didn't accepted the revised return of the assessee and taxed the assessee at the original return. When the matter was before CIT appeal also went away with the assessing officer. So when the matter came to the tribunal said that in the present case, it is very clear from the facts that there is no income which has materialized in the case of the assessee. From the facts, it was very evident that the properties came back to the assessee, which were evident from the financial statements which has been submitted by the assessee before the learned assessing officer. The financial statements were scrutinized, they were in order and meeting the accounting practice adopted. So when there is no real income, when the assessing officer has grossly failed to prove that the transactions were sham, so no hypothetical income can be taxed. The revenue took to the matter to the High Court, and the High Court also said that in the present case the findings of the Honorable Tribunal are on facts and there is no substantial question of law involved in the present case. The court said that the return under section 139 subsection 5 can be revised when there is discovery of any omission or any wrong statement, because in the present case the wrong income was included in the return of income. So this is clearly a wrong statement of income, so it can be revised. At the end of this video, once again I am repeating the name of the case. The name of the case is Commissioner of Income Tax versus Lok Housing and Construction Limited, and this case is reported in 476 ITR at page number 366, and the date of the judgment is 24th April 2025. Thank you, friends.